Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Bill Bailey, Analyst with Nasdaq IR Intelligence, to discuss trading and technical levels in the marketplace. Bill, it's great to have you with us. Welcome to Trade Talks.
Thank you. Thanks for having me. Looking forward to be here.
An important indicator for technicians is market breadth. Explain to the audience what that is and what you're seeing in the market right now.
Absolutely. The market breadth is a very popular indicator, as you mentioned. Really, it says the participation amongst the stocks and then in the rallies and the sell-offs that we see in the market. So really what the market wants to see on rallies is strong participation from stocks. Typically, we call that anywhere above 50%. That's healthy enough. We've had a really good rally, as we all know, this year. And I think at times we've saw 60, 70, 80, 90% stocks participating in these rallies. We started to see a little bit of a cool down last week. So I think that's kind of where our eyes are starting to focus on and think about that a little bit further.
How does this align with the charts and key technical levels that you're watching?
Yeah, definitely. Well, one of the main levels that comes to mind in the S&P 500 is the 3600 mark. It's a very popular mark right now for traders, specifically that 3630 mark. And so what happened there is we saw strong breadth get us there, and then we broke above it. So we had 80, 90% stocks participating in that market rally. And so what happened last week is we didn't have as many stocks participating. So I think that's where some of the softness came this week. We have a lot of the headlines going on, with COVID scares about maybe a new strain. A lot of that is just additional noise or, headlines. I like to think of things in a more mechanical manner. And the fact is that there were less stocks participating in the most recent rally higher. So there was some softening that we could have expected.
Who's behind the price action?
Really, it's institutional volume has been very helpful throughout this rally. And I think that's part of the reason why we've seen overall the market not give too much of the gains back that we've had recently. November, that 3630 level that I keep mentioning in the S&P 500 is very, very important. And we saw a lot of institutional participation bring us through that level. And so now what happens is when the stock falls back to that level, which I think we saw in Monday's trading, we saw a little bit of support there, and the stock actually ended up rallying for the rest of the day. And so what happened is that institutional participation came back, and they realized, hey, I have to spend to protect these price targets that we've reached. This can kind of go differently if this were just a retail-only rally. So retail, as you know, and has been a big part of this market's rally since the summer, and it's great to see them on the right side of the trade for once. But what happens is if it were only retail, if the market were to kind of fall back to those levels, just the nature of retail tends to be more fragmented. They're less disciplined on defending the price targets. So what happens if it was just a retail-only rally, we'll see those levels not hold up as strong as they did on Monday.
And Bill, to wrap up here, what other key items should we make note of?
Really, right now, it's coming down to the market breadth which we kind of talked about earlier. That's weakening. It's still healthy, but it's something we want to keep our eyes on as we go forward because, like I said, we were used to seeing 80, 90% stocks participating in the rally, and now we're starting to see a little bit of cool off. And then the other thing that kind of comes into mind is the technical indicator of the RSI for the Russell 2000. This is a small cap index that has been rallying very strong, as we all know, throughout the summer and into the fall. In fact, the rally is so sharp where there isn't really clear support or resistance, but we are seeing this indicator tell us we are in overbought conditions. That's not too surprising given the rally that we've had, but it's something we want to keep to monitor. So ultimately, we're not in the business of predicting the stock market or anything like that, but we want to give our clients a heads up of when we get to these levels, who's participating and the likelihood that they may participate again at these levels.
All right, Bill, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you for having me.